just got to wait. Just wait, and wait some more. Wait. Let's check it out. Let's not wait for this one, which I got an alert today. bne. Toronto Stock Exchange. Bonterra Energy Corp. And what do you got here? Check out the monthly, guys. All right, let's zoom it up. Let's center. Scoot over. See that? Get that black space. Let that imagination run wild. Monthly candles. We're going to try to identify the higher prevailing trend. So when we go to apply Stan Weinstein, we know if we got the momentum on our side. Super duper crucial. All right, where's the price action today? Here's, all right, here. Let me zoom in even more. Use your software to its full extent. If you want to get that precision, all right. Whoa, okay, barely. So this is monthly defined resistance based on the candle closes and opens. Here we had a close at 1680. Here we had a open at 1692. So the ultimate resistance is right there, and it closed at 1707. All good for now. Here's the bottom. What would be my measured move? Using my classic chart trading framework, top to bottom, add it to breakout line. All right, what are we? This is gonna be posted on the 19th of May. This is the 18th, so I'm doing this. If I would have a monthly close above $17, $16.92, that's very close though. It's better just a little bit higher there. I'd like it to be maybe at $17.50. Solid close with no wick on top. Remember, the wick is noise on the smaller candles. So if you're on the monthly's wick. This is just price action on the weekly, on the daily, but the price action on the monthly decided to close below that level, and that's how it defines its resistance. It's super duper important resistance and support. You'll see on monthly a lot of these horizontal patterns, a lot of hits on or very close to monthly defined resistance or support. Less when you go on the weekly or on the daily, usually it's like you see a lot of the detail like that, but on the monthly it really makes blocks, so you see more rectangles and horizontal like that there. See? But you have to exclude the wicks. The wicks, remember, is just noise, and if you're drawing your lines with the wicks, then you're taking noise into the equation, and it just doesn't make sense. It's the open and closes that counts. What the market decided that it's willing to go overnight with a certain price of a stock, and all the rest is the noise. It's like the over exaggerations of a move during the week. It's over exaggerations of the dailies, etc. So the smaller time frame, the more there's exaggerations. It's like a smaller rope. When you shake it, it goes up higher and up and down, but the thicker and bigger the rope, the harder it is to get that same wave, make it go up and down and volatile. And that's the advantages of the monthly defined resistance and support using monthly candles. So that's good. We're very, very close to having a breakout. Can even say, remember, patterns within patterns. 1, 2, 3, 4, 5 month here, and you could actually say it was a breakout on the 6 months right now that we're going through. A smaller pattern making a bigger pattern. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I could count. So it's a 1 year base. If it breaks out, close above that 1 year base with a target of 2050. And I always do my target considerations to see if there's resistance on the way. If we're going to run into a wall while being previous support turned resistance, and right now it's all good, guys. 2 more weeks to wait and we're ready to go. Okay, Stan Weinstein, what are we dealing with? Let me zoom in. Just another reminder, if you want to see, like, there's a stage 4 going down. The first check out the episodes I did. They're the longer ones at the beginning of the Secretwars saga. I go through, I want to refresh my skills because I had done Stan back in 2007, 8, and I just want to refresh my skills. Rereading the book a second time with experience, you understand a lot more about the book, and even Stan says that in the final chapter, that go read his book, go out, get some experience, 1-2 years, reread the book, and you'll see through a new light of day. And that's probably valid to anything you do, anything new you learn. Experience is going to change your perception. So go back, check out the Secretwars episode, and I talk about breakdowns. See that volume here, candles, breakdowns, where to enter for traders, investors, how to move your sell stops along the way. See when there's a pullback. I use the RSI to identify traders. Investors, sell stop would have been here, traders here. Once the price action starts going back down, etc. Back down, pullback, goes down, etc. Traders, investors way above the 30-week moving average, above round numbers. And after that, when you have 3 points, 1, 2, 3 or 4 here, the break on the next one, like all the way here, that's when you exit for half your position, and the remainder half either on one of your sell stops that you moved along the way, or everything goes when you violate the 30-week moving average. And you see on this break, on the stage 4, would have entered one of these candles, or maybe a little higher, entered close to here, and the profits would have been here all the way. You see, it was a beautiful stage 4, just far enough from the 30-week moving average, and you probably had opportunities to add on. You see when it starts moving sideways close to the 30-week moving average. After that, consolidates, goes down again, another chance to add on. But the further you add on consolidation patterns, the less and less you're probable of, or you're getting more probable of the trend actually slowing down and entering a stage 3. So initial breakout and the first or second consolidation patterns where there's a continuation breakdown are pretty good. Other than that, you should maybe put more of your eggs, try to find stage 4 breaking downs and stage 2 breaking outs if the case need be. All right. And if you can't find any, keep looking. Always. So go back to the original Secretwars and use the audio of the podcast, not just as a guidance on maybe what a stock's going to do as a pick or a play, but as an actual teaching and demonstration of how to apply. It helps a lot. It helped me just doing the podcast. Sometimes you read the book, and you could always go on stageanalysis.net, a wealth of information there. It's all written down. It's good. Very interactive following over there, crowd. You get a lot of answers, but also visualizing it and seeing how it is in action there really helps. So watch the videos, watch them again, and I do it. Sometimes I go back, how did I do that? And then, okay, I remember that's how you do it. All right, let's get back to this, man. bne. All right, there we go. Look at the nice base. Stage 4, sideways move. You probably had a trend line violation, would have been out. You don't want to stay in a stock when it's moving sideways. It's just wasting time. And here we go. What do we have here? Okay, this a lot of resistance right here. So on the monthly, we're getting close to, this is the monthly defined at the 1692. We're getting close to breaking that out. it's almost on par with the weekly defined resistance, which is right here at 17, about 1706. But look at that, the Ichimoku cloud. Stan didn't have it, but I picked that up from ISA Trader, stageanalysis.net. And if I have two stocks equal, let's say I have two stage 2s beginning, and one of them, you overlay the Ichimoku cloud, one of them has that big red cloud, which is resistance, Ichimoku cloud defined resistance, and the other one doesn't, well, the one that's going to be better is going to be the one that doesn't have this big red cloud on top. It just helps you weed out even more potential problems. The price action could go up, and then after that, they have all this resistance. It could bounce back down, and that's good also, because if ever we get a breakout with a big volume, see right now in the breakout, I would need at least a 1 million candle, 1.5 million candle, like that on a breakout candle going above here, above the 17. And if I wouldn't want to enter here in this cloud area because I think there's a pullback, then I just let it go. Stan didn't use Ichimoku cloud. He said nearby overhead resistance. Okay. But if you don't have the Ichimoku cloud, maybe here, so I'm far enough, you let your emotions get in. It's not mechanical enough. And then if you really want to get in that stock because you read something good about it on the internet, that they invented a cure for cancer or whatever, then you might let yourself land on an emotional landmine and enter. Doesn't mean the stock's not going to explode, but you could get whipsawed, come back. Either case, if there's a breakout, we get the candle, we have the RSI going up, but there's an Ichimoku cloud, and you really want to play the stock, it's time to just wait. Wait for what? Just wait. More candles, let it go up. You could take a small position if you want here at the breakout. Let it go up. Let it go through all this resistance, come back down. Hopefully, well, it has to come back down on contracting volume. If it does, then you could come back right here at the breakout level. And then by the time it does that, usually does that within 1 to 3 months. By the time it does that, the Ichimoku cloud defined resistance is starting to evaporate, because the more we move sideways, the less and less that overhead resistance is valid. It just dissipates, and then after that, go out. Just see this cloud as a stock that hasn't had a stage 1 or stage 3 long enough, hasn't matured enough, hasn't weeded out whoever wanted to sell yet enough, and those potential sellers are still there at these levels. It tells you that the stock is just not ready yet for you to play a breakout that's going to rocket through this like that. So a little few hurdles. Monthly, if we get a nice close above that 1692 or 17 level, it's great. After that, we have to make sure we have that candle with at least 1.5 million, twice the average of the previous 4 to 5 weeks, and the RSI going up. So it's pretty close. It's in a solid stage 1. 30-week moving average start etch upwards. All right, BNE, we're getting close, but you're another good example that we just need to wait. All right, ciao.